What is today about? Well, we're hearing a lot around the topic of risk management and risk reporting and how that can really bridge the gap where there might be some missing pieces or missing information and accelerate missed opportunities. These opportunities could be more than just loss mitigation. So obviously you can miss an opportunity and step in the wrong area or do something that costs your organization reputational points. It may cost you actual money. It may cost you operational control as you're under some strict orders to perform some specific tasks. But more importantly, it might cost you innovation and revenue opportunities. So how can you start to understand the negative consequences of overlooked information? And kind of compound that, not just overlooked information, but the right information. There's so much information that's at our fingertips today. How do you start to hone that and focus it in the way that's most applicable for your organization? So to kind of touch on that, as a phenomenal resource that I know that the American Bankers Association has put out, research study. They worked with 250 bankers that are really trying to meet today's challenges and opportunities across risk and compliance. But these are CEOs, CFOs, chief risk officers that are trying to perceive gaps in risk data. And really, what are they wanting to, where are they at today? And what are they wanting to do about it? Where do they believe the gaps are, and where there could be some easy wins for innovation in this space? So we'll spend just a couple minutes on this, just because there are some pretty salient points that came out of this report as far as risk reporting goes. I know that's the topic of today, but really set in the context of why this is important. You've got executive level titles that are identifying gaps in existing risk and compliance data and reports. So where are these gaps? We'll touch on a few of these here that are highlighted and actually show you some examples of that throughout the conversation today. But just a few comments. I'll start with the first one. Ken, financial performance, not tied to risk and controls. What are your thoughts there?
Not tied to risks and controls. Unfortunately, we spend an awful lot of time, I think, focused on, they always go nuts when I say the deck chairs on the Titanic, but we spend a lot of time focused on risks and controls and the risk statements and control statements and doing risk assessments, and not necessarily tying those to financial performance, particularly the bank's internal performance and external economic data, market data that tends to impact financial performance. So again, I think there's a significant gap there. So yeah, you're right to be worried about financial performance indicators, not just your internal ones, but how do your internal ones match, or how are they influenced by external economic data? And so that's why we're tying in things like Fred data and other external data sources, and you'll hear that theme throughout the webinar today.
Yeah, if your own risks and controls that you're looking at internally are siloed and simply a check the box activity, it's not giving you a real idea of where the connection is to your strategic objectives. The next two are big ones for me, and I see them all the time. Peer performance, and Ken already mentioned too few metrics from those external sources, such as market conditions. If you have a good idea, if you can tie those financial performance indicators to your risk and controls and assessments and understand really how well we're doing, well, that's one perspective. Now, how do you compare that to your peers and to external market conditions? At the end of the day, like if we say we set a growth path of 5% growth, and we hit that right on the head, we did a really good job of doing that, but all of our competitors hit 15 or 20% growth. What does that mean to us? And it may still be fine. It may still be exactly where we want to be because we're less risk averse. We're more risk averse, and we don't want to necessarily extend our. But it could mean we're falling behind in a market that is very open for us to be able to drive more revenue, or in fact add different products or services or new innovative areas for our members or customers or whoever we're working with. So those are two big areas. The second two metrics are not benchmarked for peer performance, and the data's out there, right? You got FFIC call report, you've got metrics from market conditions, and that's you already mentioned Fred. You got CoStar, you got other types of areas where you can get some phenomenal data to help you understand where you're sitting and what does your internal data mean in context to where you're looking at. This next one, Ken, I'd love your thoughts here. On the risk appetite side of it, please tell me your thoughts there.
I think we give management teams, management committees, and boards of directors a lot of data and sometimes not a lot of actionable information that they can rather quickly grasp. So things like charts, graphs, comparisons of things over time to timelines, multiple things tied together on charts, like, where are we in relation to our risk appetite? At the same time, where are we in relation to our peers, regulatory limits? Let's take a look at all of those things together. And if we are the outlier, if everybody else is moving to the left and we're moving to the right, what is it they know that we don't know? Are we just that much smarter than everybody else? Perhaps not. So the data visualizations help directors in particular get a pretty good grip on the bank's risk position, much better than a bunch of data on, sort of the dense reports we tend to give directors.
Absolutely. And both your risk appetite tolerance and your regulatory limits, which are tied together in most cases, or ideally are, right? Those should help really guide when are you starting to get in trouble. Those visualizations and graphs should make it jump off of a chart, or where is something not working like we expect it to. And if I'm having to thumb through 10 spreadsheets or a PowerPoint slide that has an anecdotal red, green, yellow, how does that help us make better decisions as an organization? So we're going to touch on each one of these today, given that those were the top areas of feedback. How do we start to address that? How has technology advanced to support the people and processes across the organization? And it's not just a risk and compliance game. I mean, you have the entire executive staff that has responsibilities for strategic objectives, all the way down to your frontline employees who are interacting with customers and members on a day-to-day basis. Now, we started with the CEO and CFO because obviously this is getting a lot of views and a lot of input from how do I take this traditional cost center and make it more strategic in nature and really have it be an innovation revenue driver. But we're hearing it from the risk titles as well, directors of risk, chief risk officers. Now, they're very similar. That the order and the preference might be slightly different, but this first one here, if my metrics are not tied to strategic goals, how important do we feel like what we're doing? I mean, they're very similar, but it's kind of looking at it from the other direction here. These need to meet in the middle. So why does this matter at the end of the day? Well, there's a lot of risks that we may not know about that are directly related to how we are operating the organization. And there's also a lot of opportunities that may be hidden for that unique innovation, for becoming the next best thing that's out there. So we'll cover all this. I know, Justin, you already mentioned the recording and the slides for this, but this is also, if you're an active ABA member, you have access to this report as well. This 2023 Outlook. I highly recommend taking a look at it on your own time. We're always happy to share some of the top takeaways. There's a few recordings and analysis on that, but please feel free to reach out to us. This is available for all of you ABA members that are out there.